Can someone with the learning unit please send to the group? Okay, you guys want me to send this in the group. Let me do that. I apologize. Let me send it to the group. Let me send this question to the group so that you guys can have access. Okay, so I have sent the question to the group and I will be allowing a maximum of 4 minutes, right? For those maybe who want to print 5 minutes rather. For those who want to print or sort themselves, I'm going to allow 5 minutes and then yes, we will comment. Almost. Yes, capital gains tax in detail, it won't. But remember, there's what? They are capital allowances, right? So capital allowances is not capital gains tax. So capital allowances will be tested. Capital allowance, they have to test it. Okay, by now everyone should have been sorted, right? With the question paper, right? So now, what I'm going to tell you guys is that let me just remove this annotation. Um, okay, so now what I'm going to tell you guys is that the reason why I am doing this particular question today, right? This particular question, it is because of now. After this question, after we do this question, this will cover all the basics that you are going to need with relation to allowances, right? So now, when you prepare for your test, you should not focus more on allowances, right? You should, because of this should be sufficient. You should now be focusing on preparing the taxable income where there are more gross income scenarios as well as special inclusions, general deductions, etc. Right? So you should focus on that. And now, for now, I want to get this out of the way as it is the most confusing one, but you should not spend a lot of time on it, right? So this should be sufficient for the test in terms of allowances. But for gross income and special deductions, etc., the ones that will be highly included in the test, I am going to cover them in the bootcamp class. So now I am just doing this class to save you guys some study time, right? So after we do this question, you can do it on your own and then you mark it and then you know that you are done with capital allowances. You only focus on certain questions that will be at a similar level of assessment, right? Okay, nonetheless, but I will show you guys later. So now, so please do not confuse capital gains tax and capital allowances, right? So those are two different things, right? So we will not be fully focusing on capital allowances alone. We will also be focusing on general deductions, etc., right? So we will not be focusing on that alone. So now let's read the required, right? So the required, it says calculate the income tax payable by Fafa Pty Ltd for the 2024 year of assessment. Interest in terms of Section 24J can be ignored for this question. Right. So now let's read the scenario, but we will read the point on a point by point basis. Why are we doing that? We are going to read and apply, right? So now Fafa manufactures basketballs. The company's manufacturing process has been approved by SARS as a qualifying process of manufacture. Fafa is not a small business corporation as defined in Section 12E of the Income Tax Act. Fafa Pty Ltd is a registered VAT vendor making only taxable supplies. All transactions are conducted with registered VAT vendors unless specifically stated otherwise. Where necessary, Fafa obtain valid tax invoices and the required documentation for all its transactions. So now, this scenario, what I can get here is that, okay, I know that the small business corporation is not applicable. If it is not applicable, I will use the rate of 27% when calculating the tax, right? But if the small business corporation was applicable, I could have used the rate provided. So now, they also tell me that SARS approved this company as a process of manufacture. I know that some allowances would be now applicable for Section 12C, right? Section 12C only deals with process of manufacture, right? Okay, nonetheless, let's read this part. FAFA will make use of any possible elections that will legally minimize its tax liability. The following information is available to calculate the company's taxable income for the 2024 year of assessment. The company's year end is on the last day of March. So all amounts exclude VAT. Right, that is great because we know that when we include amounts in the taxable income, they need to be exclusive for VAT. So we don't need to stress about VAT unless stated otherwise. So every time when I attempt a question, I need to look at the year of assessment, which is the 2024, and this year of assessment ends on the last day of March. So meaning the 31st of March 2024. All right. So that's what we are looking at. Now, let's do this. So we are told to do what? To prepare the income tax payable. So obviously, when you prepare an income tax payable, you need to do a table, or you need to do this skeleton where you would be computing your answers in, right? So obviously now I would have what? I would have details and I would have amount here. So we are going to apply at a point by point basis. Okay, so now number one, taxable income amounts to 5,200,000 before taking the information below into account. So they already gave us the taxable income before the below information. So now this is a clear guideline that, okay, I can start with what? With my taxable income. That's what they are telling me. I can start with my taxable income, right? So my taxable income is what? Is 5,200,000. That's my starting point. That is what? That's definitely my starting point. Okay, perfect. Now I have my starting point. I now need to take the below information into what? Into account. I need to take the below information into account. Part 2. FAFA paid pension fund contributions of 70,000 during the year on behalf of an employee. The salaries amounted to 500,000. Now, this being said, what can you guys say about this statement? Okay, now let me come to the rescue. Right. Okay, there is a comment in the chat box. It's two-part statement. One is a pension fund contribution and the other one is salaries, right? So now, okay, great. So what we need to identify is that FAFA paid the following amount to the employee. That's the crust. So any amount that is incurred by the company for the employee, right, such as salaries and any pension fund contributions, they are deductible, right? So obviously we know that contribution to the fund, you have done this. This is what? This is part of your general deductions, right? You had done this earlier on. This is part of general deductions. So this would be a deduction, right? So this would be what? A deduction. So this would be a deduction of 70,000. Now, salaries are also incurred in the production of income. Because of if you think of this logically, when you employ employees to work for you, you are trying to make income for that business. So they are incurred in what? In the production of income. So salaries are incurred in what? In the production of income. So now we would also deduct. So now let me just give you an overview of this thing. So you need to think from your point as the business that if I am incurring this expense for business purposes, it only makes sense for me to deduct it. If I receive income that relates to business, I need to include it as income, right? I need to do what? Include it as income. Now, salaries are what? Are a deduction. I incurred them during me trying to make profit, right? I incurred them while I was trying to make profit. Now, moving on to number 3. The company paid an annuity of 75,000 to the wife of an employee. Now, the biggest question that you should think is what? Is, am I incurring this amount for business purposes? Am I incurring this for business purposes? That's the biggest question that you should have for yourself. Now, what do you think you should do? The company paid an annuity. We agree that the company paid, but is it for business purposes? Please check in the chat box, what would you have done if you were writing this paper? Please don't type on the screen. Who's this person? Let me disable these annotations. Let me just disable annotations. Yeah, I think this should do. So they are commenting in the chat box. So they are saying that we should deduct the 75,000. Okay, why should we deduct the 75,000? Okay, now this is paid to what? To the wife of the employee who died, right? So the only reason that we are deducting it is because of now it is an annuity and that is paid to the wife of a former employee. So it is paid to the beneficiaries of a former employee, right? Annuity payments to depend. There's a comment in the chat box. Annuity payments to dependents of deceased employees are generally not deductible for income tax purposes. Add back 75,000. Why are you saying that? Why are you saying that we should? add back 75,000. We should not add it back. That's a deduction, right? So this is a deduction. This, if you want to look at it in terms of the legislature, this is part of your section 11M, right? So it is part of your general deductions, right? So any annuity that you pay to the dependent of a former employee, they are deductible, right? So now annuity, so this annuity would be 75,000, right? So now that being 75,000, let me now move to number 4. Restraint of trade compensation of 900,000 was paid. Now, the key question was paid to for what? And okay, let's read. Was paid to the financial manager who resigned. So now the restraint is effective for 2 years, and the full amount was included in the financial manager's income. So this is not really important. The main important thing is that a restraint of trade is paid to a former employee. So now, when a restraint of trade is paid to a former employee, so you should take note that only if it is paid to a former employee, because of sometimes a restraint of trade can be paid to another company, then that would be a different scenario. But now, it now being paid to a former employee, it will also be included in the employee's income, right? But this you will deal more in the upcoming, okay, I think upcoming weeks or 2 months. But what you should know now that forms part of the general deduction is that a restraint of trade payment, right? So this restraint of trade payment has its own laws. So when a company pays a restraint of payment, right? So now we need to take the amount and we are going to divide it by what? By the higher of 3 years or the restraint of trade term, right? The restraint of trade term. So now, which one is higher? The restraint of trade term is 2 years, right? So now, what would be higher? The higher one would be the 3 years, right? Okay, so we would do what? We would definitely take this restraint. We would definitely take this restraint of trade of 900,000. And what are we going to do? We are going to divide it by 3. And now the company will be allowed to make a deduction of 300,000. Right? So now moving forth, Fafa donated 400,000 to sponsor a child, a not-for-profit organization, to support the initiative of introducing sporting activities to children in rural areas. Fafa received a Section 18A receipt for the donation made. So now, every time I see a donation, I am going to flag it for myself. This is something that I want to deal with at the end when I am done with everything. This is something I deal with when I am done with all the information. I'll show you why we are going to flag it for ourselves. So we are putting it in red so that we can come back, right? So now, number 6. Fafa entered into a learnership agreement with an employee on the 1st of January 2024. This employee had concluded a 2-year learnership agreement with the previous employer at the beginning of April 2022, but he resigned from that employer on the 31st December 2023 and continued with the original learnership agreement at FAFA. The employee successfully completed the learnership with FAFA on the 31st of March 2024. The employee does not have disability. So now we need to look at this thing. When is our year end? Our year end is 31st March 2024. Right. Okay. So this employee concluded a 2-year learnership agreement with the previous employer. Right. So this was at the beginning of April 2022. But he resigned from that employer on the 31st December 2023 and continued with the original learnership agreement at FAFA. So now this employee completed this learnership agreement while in FAFA, not at the previous at the previous company. So FAFA is the one that is allowed to claim an allowance because of the completion is in was during FAFA's period, right? So now here are the things that we need to consider. Now, when you're dealing with a learnership agreement for an employee that does not have a disability, you will be dealing with 40,000. If that employee is at an NQF 1 to 6, right? So this employee must be at an NQF level of 1 to 6. This employee should not be disabled, right? So we are going to have 2 allowances in this case because of there is one where the qualification was completed, and then FAFA also entered in a learnership agreement with an employee on the 1st of January 2024 in this current day of assessment. So there are 2 things that we need to look at. We need to look at the completed learnership. So the completed we will have what we call a completion allowance. So now what is a completion allowance? Completion allowance is an allowance that you get upon completing your course. So it is 40,000. Then you multiply with what? With the years that it took the employee, right? So now, it took the employee 2 months, right? From April 2022 till 31st March 2024. So that would be 2023, 2024, 2 years. So now I would multiply this with what? With 2 years. Now, that being said, that is my completion allowance. Now, I have what we call an annual allowance. So, an annual allowance, you see here, it says it was entered onto the 1st of January 2024. As much as we are still taking this 40,000, but we can't use a full year because we don't have a full year. From the 1st of January 2024 to the 31st of March, it is only 3 months. So it is only fair for me to multiply by 3 over 12. And what does that give me? Let's calculate. That gives me 10,000. Okay. Great. Now, moving on to number 7. A trademark license was renewed on the 1st of January 2024 for 5,000. A new trademark was also purchased on the 1st of February 2024 for 50,000. That's what we are told. The trademark license was renewed on the 1st of January 2024 for 5,000. A new trademark was also purchased on 1st February 2024 for 50,000. Right. So now, that being said, what we are just going to do, we need to apply the trademark license. Right. So now, any renewal of a trademark license, we are going to include, and given the fact that it is below 5,000, so we could just say trademark, and we will just deduct the renewal first. So the renewal, because of now, there's a trademark license that was purchased as well as the renewal. Let me do this. Renewal. So 5,000, that's not an issue. The only issue now comes with the purchase of this trademark. So the issue comes with what? With the purchase. So now, what do we do with the purchase? The purchase, what we do not deduct it, right? We do not deduct it. They see it as a capital in nature item, and we do not deduct it in terms of our deductions. We do not do that. So trademark, oh, this is no, not 50,000. It's nothing. We do not deduct. Sorry. Now, going to number 8. Trading stock. This one, they love it. Trading stock, restraint of trade, salary, they love it. You'll find it in your upcoming test. Trading stock, salary, etc. I will give the rest later. So trading stock which was acquired in the previous year of assessment costs 800 and was removed during the year by the managing director for private use. The market value of trading stock at the date that it was removed was 1,000. So now this is trading stock, right? So now what the trading stock that they love, it is mainly based on the opening and closing stock, not really this one, but they also love donations, right? So no, this is where we have to apply ourselves, right? So we have to intensely apply ourselves. So this trading stock, it was acquired last year. So now it was taken for private use. So when someone takes something for private use in the company, we are going to remove it at market value, right? So we are going to remove it at what? Or recoup it at what? At market value. Recoup it. Recoup it is the right way. Remove is unprofessional. Right. So this thing, this trading stock will be recouped at market value. Right. Now, let's think of trading stock. What would you have done in trading stock? Obviously, now, if you were to include opening stock, if it was purchased in the prior year, this would have been part of your opening trading stock, right? And you know what do we do with opening trading stock? We deduct, right? Or if it was purchased in the current year, for example, this is not the case. So if it was purchased in this current year, it would have been a deduction of 800,000, right? Just an example. Now, if this thing was deducted as trading stock, and now the manager comes and takes it, it is no longer trading stock. So it means now, why would we want to make a deduction? SARS will not allow. You want to claim lower tax, but this thing was not sold in the um production of income, not in the production of income. It was not sold in the business, rather. Right. So now, what they would do, they would recoup it at market value, right? And now you see they are recouping it at the higher amount. But normally, what people do, but that's a story for another day in terms of tax planning, but that's more in relation to VAT. So let me not go into that one. So the main important thing that you have to know for this is that trading stock, when it is taken for private use, it is recouped at market value, right? So now this would be 1,000, right? That would be 1,000. So now, if someone is very smart but they are anti tax avoidance, if you buy something in terms of your company and the day it loses value in terms of the market, you can now recoup it for personal. You could have been able to claim a deduction, right? So that can reduce your tax for a company. Now, number 8, Fafa also donated trading stock to a local basketball club during the year. This stock had been acquired in the previous year of assessment at a cost of 7,000. Right. A Section 18A certificate was not received. So this is not a Section 18A donation. So they are telling us the market value of the trading stock at the date it was donated, it was 10,000. So when you donate something and it's not part of a Section 18A allowance, this one I'm not going to pack it because of it doesn't have a Section 18A certificate. This one will also be recouped. It is treated the same as taking stock for private use because of you could be donating it for private purposes. We don't know the purpose that you are donating because of it doesn't have a certificate that you are donating it to a public benefit organization, right? So you will also do the same. Now, recoupment is positive. Sorry, recoup is positive. Right. So recoupments are positive. Now, moving forth, we're going to number 9. Right. Is everyone still comfortable? Can I get thumbs up? Is everyone still comfortable before we go to number 9? Number 9 is where I am going to need you guys. Is everyone still comfortable? I just need thumbs up. If you're not comfortable, you can type in the chat box what you're not comfortable with. Or you can unmute, or that's also fine. Okay, I am seeing hands. I'm seeing hands, but I'm not getting confident hands. The number of hands that are up are very low. Okay. Let me go to the chat box. Okay, or in the chat box, it's hands. Okay. No, noted. So now let's continue. Right. So we would be looking at number 9. Number 9, it says, uh, number 9, it says the cost of fixed assets that FAFA used during the year consists of the following. There is a manufacturing machine Z purchased new in this current year of assessment, obviously 1st of May. The price includes VAT. We don't like it. We don't like that part. So there was a truck purchase second hand on the 1st of December 2023, a burglar alarm purchased on the 1st of March 2023, manufacturing building purchased on the 1st of January 2019, manufacturing machine A purchased second hand on the 1st of April 2023 and bought into use on the same day. The machine was not from a connected person. The machine was sold for 100,000, right? So now we are going to apply each one separately. So, right? So the first one that I'm going to start with is what? The manufacturing machine. So now, with regards to the manufacturing machine, there are things that I need to be aware of, right? So I am going to tell you guys just a brief view about section 12C. So in this case, section 12C, cap C, right, is going to apply. So section 12C, it only applies for assets that are used in the in the process of manufacture, right? So now, if it is a new item, it will be allowed 40, 20, 20, 20, right? So the allowances would be 40 in the first year, and then in the subsequent 3 years, it would be 20%. Now, if it is second hand, it will be only the 20%, right? So now that's just a brief summary. So machine Z. So now machine Z. It is purchased new, right? So I said if it is purchased new, we are going to use what? We're going to use the 40% in the first year. And now I said I do not like VAT. VAT, we need to exclude it. VAT, we need to exclude it. We don't want it. Right? We don't want it here. So we don't want it. 513,000. We need to remove the VAT multiplied by 100 over 115. And then only now we can multiply by 40%. And now what does this give us? Let's calculate. So this gives us a deduction of 178,435. Now, moving forth, we have what? We have a truck. A truck is not in the process of manufacture. I'm not going to apply section 12C. A truck, we apply section 11E. Section 11E, it is obviously according to the binding general rule number 7, right? So they are telling us here that trucks is 4 years. So I'm just going to allow an allowance on this truck. So truck over 4 years. Right? So this truck would be 800,000 over 4 years. Right? So now that being over 4 years, when was this truck purchased? On the 1st of December 2023. But now what is my year end? 31st March 2024. So what is the period there? 4 months. So meaning that I have to multiply by 4 over 12. All right. So 800,000 divided by 4 multiplied by 4 over 12. And this gives me 66,667. Right. Okay. So now moving on, we have a burglar alarm. A burglar alarm also, not in the process of manufacture. We are going to apply section what? Section 11E. Right. So now, as applying section 11E, I think there's a comment in the chat box. Why do we divide by 4? Because the trucks have a right of period of 4 years. That's why we divide by 4. Right. Okay, great. So now, the burglar alarm. 60,000. This was purchased in the prior year, right? 1st of March 2023 is in the prior year. So now, for this current year, I can take this 60,000, right? And divide it by 6. Because of for this current year of assessment, I had it for the full year, right? Why 6? Because of they told me that the burglar alarm, the right of period is 6 years. So obviously that would be what? That would be 10,000. Right. That would be 10,000. Okay. Now, we also have a manufacturing building. We have what? A manufacturing building. So, as we have the manufacturing buildings, you apply section 13.1, right? So, manufacturing buildings, you apply section 13. Section 13 essentially says you need to allow a wear and tear on buildings, or an allowance rather, of 5%, right? And you will find that all buildings, whether it is administrative, whether it is what, as much as they have different section numbers, you would allow the same rate, right? What is that rate? 5%. So that would be 60,000 multiplied by, no, not 60,000. What's this amount? 2.5 million. So 2.5 million multiplied by 5%. And this will give me 2.5 million multiplied by 5%. This gives me 125,000. That's what I get. Definitely, that's what I get. Now, moving on. We have machine A, right? So now, this is not capital gain. This is not capital gains, right? Okay, obviously, there might be consequences, but now we are not going to look at capital gains, right? So what we need to look at is the allowance and also the recoupment or scrapping allowance. Remember, scrapping allowance falls part of what? Of general deductions. Section 11O is scrapping allowance when you make a loss. When you make a gain, which is recoupment, that case it would fall under section 8, right? So now, first and foremost, what we need to do, they are saying that they have sold. So only when they make a sale, right, you can calculate whether they made a recoupment or a scrapping allowance. Scrapping allowance, loss, recoupment, profit. Now, only when they make a sale. So what you could do is that obviously you need to come up with your cost, and your cost in this case is 200,000. And now we have what? This is a manufacturing machine. Second hand manufacturing. So what if the word manufacturing machine comes to my mind? What comes to my mind? Section 12C. Section 12C, this is second hand. So second hand, as I mentioned, we are applying 20%. We are not going to be applying the 40%. So now, so this is the allowance, right? So this case, we would take the 200,000 multiplied by 20%. So 200,000 multiplied by 20%, this gives me 40,000. Now this 40,000, this was purchased when? This year. 1st of April is the beginning of our current year of assessment. So this will definitely be what? The allowance for this year, right? So I am killing two birds with one stone. While I'm doing the calculation here for profit or loss, we are just also accounting for. So now, when I take this cost less allowances, I will have my tax value. So I will have what? My tax value, which is 160,000. Why 160,000? It is the cost less allowance. That being said, this machine was sold, sales or selling price, to be precise. The selling price was 100,000. It was sold for 100,000. So now if you sell lower than the value of your product, what's that? You are making a loss. Now in tax, we do not say a loss. We say a scraping allowance because of this is a general deduction, right? This is a section 11O, right? So the scraping allowance would be what? Would be 60,000, right? And now, if you were to get a scenario where they sold in the test that you are writing, it would be a scraping allowance. It won't be a profit because of they would want to test section 11. Oh, then in your other test, not this one, in your other upcoming test, that's when they will want to test the profit side, where you will be doing the capital gains, etc., in detail and everything. Okay, so now this would be 60,000 scraping allowance. Okay, so now I am happy with that. Now I need to do these transactions. Fafa decided to lease a commercial building from which to sell some of its own manufactured stock and concluded a lease agreement with Property P12 Ltd. But I'm not suspecting them to ask this particular question that we have done, right? I'm just saying if it does happen, but I'm not expecting it. So now, the lease period commenced on the 1st of August 2023 for a 10-year period, with an option to extend for another 5 years. So Fafa had to pay lease premiums of 90,000 on the 1st of August 2023 for the right of use of property. So Fafa also had to effect improvements on the premises to the value of 285,000 and pay monthly rental amounting to 10,000 from the 1st of August 2023. So Fafa brought commercial building into use on the 1st of August 2023. So this one, it's a tricky one. The building improvements commenced on the 1st of September 2023. They were completed, right? They were completed and brought into use on the 1st of February 24. The cost of improvement was 305,000. Now, that being said, there are a lot of transactions in this one, right? So the first one that I can see is that there is a lease improvement, there are lease premiums, right? So Fafa decided to lease, meaning that you are the lessee, right? So now the first and the simple one is the lease premiums that you paid. Lease premiums are some form of rent. If you think of it in accounting, this is rent that you paid, right? So that is rent that you paid. So now, FAF had to pay lease premiums of 90,000 on the 1st of August 2023. So for the right of use of the property, right? So this is, if you think of it in another way, it is, some would call it a deposit. That will also work. Now, the lease premium is not that difficult to calculate, right? It is not that difficult to calculate. So now what we need to look at specifically here, it is the months, right? So we need to look at the months. So machine A, I will explain a bit later because of machine A is not really important rather than this part, right? We'll explain at the end. So now lease premiums. So I know that I am given 90,000. This is the 90,000 that I'm given. Now, it was for the right to use the property. It was paid on the 1st of August 2023. And this property, you have to use it for how long? There's a lot of things. You have to use it for 10 years and they have the option to extend for 5 years. So if there's an option to extend, we add the 2, we add the 10 years and we add the 5 years. So this lease premium was paid for 15 years. But in this current year, from the 1st of August to what? To the 31st of March. How many months do I have? August, September, October, November, December, January, February, March. 8 months. So this lease premium in this particular year, I would have it for 8 months. So now, this would be 90,000 divided by 15 multiplied by 8/12. This is 4,000. Right. So that is what my lease premium. And now, the rental part that I talked about, but I didn't calculate. This monthly rentals, they paid them for from the 1st of August, right? So now, rental, we just take this 10,000. It was paid for 8 months also. 1st of August is a representation of 8 months. So we will multiply by 8. And then this will give us, and this question is the one that loves to throw a lot of people, right? Because of there are always, or more than one, there are always 2 or 3 line items that you have to write here from this one scenario, right? So it's always more than 2 or 2 or more, right? Now there is where it gets tricky, the lease improvement. Now the lease improvement. What's going to happen with the lease improvement? We have the amount here, 285,000. Okay, the amount I have, I'm happy. So now, where it gets tricky, as much as we know this is for 15 years, but with the lease improvement, we need to deduct a couple of months, right? We need to do what? Deduct a couple of months. Okay, so now, lease starts on the 1st of August, right? So as the lease starts on the 1st of August, let me do this. So the lease starts on the 1st of August. But now the lease improvements are completed on the 1st of February, right? But the year end is on the 31st of March. So now, how many months have passed from the 1st of August to the 1st of February? 6 months have passed. So, meaning that out of the 15 years, so now, since I will be working with months, I would love just to convert everything to months now. So, I would love to convert everything to months. What would I do? I would now take 15 years multiplied by 12. I want to convert everything to months. So, 15 multiplied by 12, it gives me 180 months. So, now, out of this 180 months, 6 have passed from the 1st of August to the 1st of February. 6 months have passed. Now, this gives me 174 months that are left when the improvements are complete. So now I will take this 174 months is what I would be working with. So now I can now divide by 174 months. So now this lease improvement for this year of assessment, I can claim a deduction for these 2 months now from the 1st of February to the 31st of March. So 2 months, that's why I multiply by 2, right? So now what would be the amount that I get? So any questions that you have pertaining to this lease improvement? Get the checkbox. 174. So 174 technically 15 years is equals to 180, right? Months. So since 6 months have passed from the 1st of August till the 1st of February, it represents 6 months. So it means that now I am left with 174 months. That's why I can divide everything with 174 months, right? Okay, so now Mulatela, can I take your hand?
Yes, I didn't get the part why you said 174 times 2. Where is this 2 coming from?
It represents the remaining months in this current year of assessment. Our current year ends on the 31st of March. Now, the date when this improvements were completed on the 1st of February 2024 till year end,
Mm.
it is 2 months. I can only account for deduction or for the improvement as a deduction for these 2 months only.
Oh,
because
okay.
it is from the 1st of March till the 31st. I mean, 1st of Feb till the 31st of March.
Okay, thank you.
No problem. So now, um, we would now move to 11. Okay, Tuto, can I take your question too?
Yes, please, sir. I just want to ask regarding there's a date that we were given here to say the building improvements commence on the 1st of September 2023. So that is just wholly relevant to the situation.
Yes, this is not because of here, maybe they just want to trick you with the dates, but we
Mhm.
need to look at the date of completion.
Okay,
And
so
yes,
much.
so now moving forth. Obviously, now you can't get an allowance on this building. Why? Because you don't own it, you only lease it, right? So we can't apply the 5% allowance here, right? So now moving forth to number 11. Fafa received a huge long-term order of basketballs from one client during September 2023, which is in the current day of assessment. The installment credit agreement was concluded, which provides for the payment of a deposit of 25%. The balance, including finance charges over a period of 18 months, this debtor's outstanding balance on the 31st of March 2024 was 150,000. FAFA's gross profit percentage is 50%. So now, this is information that we are provided, right? So further state that the debtor's allowance claimed during the previous year of assessment amounts to 100,000. So I can see here they are telling me about this data, but um, the only things that I can see here that are relevant to us, it is us adding back the or it is us deducting the current year and adding back the prior year, right? That's the only relevant thing that I see, right? So with debtors allowances, what you always need to do is to add back prior year allowance. So this would be what? This would be 100,000. And then we would do what? We would deduct current year. So now, current year, they didn't give us a lot of information. They just said it's 150 and the gross profit percentage is 50%. So we will take this 150 multiplied by the gross profit percentage of 50%, right? And now this will give me, no, we do what? We add back and we deduct. Okay, so now this is what we have, right? Remember, we have packed donations. So basically for building improvement, you deduct the remaining periods, not past period. Yes, you deduct the remaining periods. So now remember that we had packed a lot of things, not a lot of things, but the donation. But before we go on to that, they are telling us the company incurred assessed loss of 90,000, right? So what we are now going to do, we need to add everything here and check whether it's a positive. Then if it's a positive, we can deduct the assessed loss, right? But with my naked eye, I can see that we would have a positive. So let's deduct or let's net all the amounts. So you can only deduct allowances if you are having a positive figure. So now I get to a taxable profit. So I get to a taxable profit of 3 million, or taxable income, not taxable profit. Why am I saying profit? 3,628,622. That is my taxable profit. Now, based on that, I can now deduct what? I can now deduct my assessed loss. Right. So my assessed loss is given to me as 90,000. Okay, so then I would have what? A taxable profit. I will taxable income, right? Taxable income of the net amount, right? So I just need to take that amount and do what? And deduct, right? So there would be minus 90,000. So that gives me 3,538,622, right? So that's what I get. Now, when we go to donation, where is that? Now, this is the time for us to do donations. So when you do the donation, and this should be a Section 18A donation, meaning that it must have a public benefit organization certificate, right? So this is the receipt. So what you do, you will deduct, right? You will deduct the lower of 10% of this taxable income, or the actual donation. So the actual donation is 400,000. Now 10% of this would be 353,538,62. How did I get this amount? I just removed this 2 here, because of obviously when you multiply by 10, you would remove that 2, right? So which one is lower? This 300,000 is lower, right? Not the actual amount. So that's why we would now deduct. This is why we would now deduct this 353,862. That's why I love ending with the donation, because of if you utilize it somewhere above, you are going to have a big problem, right? So now my taxable income would be net, the donation would be 3,184,760. Now, great. So the question, or the required rather, said I must calculate what? The income tax. Income tax. So this is not a tax. This is just a taxable income. So I need the income tax. Income tax, I would take 3,184,760. and I will multiply by the rate that they charge for companies, right? So what rate do they use? They use a 27%. So I will now multiply that with 27%, and that gives me an income tax of, obviously it is payable because of now we've got a taxable income, right? It's payable. So if you got receivable, then it means and you made a calculation error somewhere because of they told you that this is an income tax payable, right? So now I can now answer any questions that you have pertaining to everything that we have done today. This was a lengthy class. I didn't think that I would keep you guys for this long, but it is for your greater benefit. So any questions that I still need to clear? Which year is this question? This is based on last year's information. It's a 2024. Okay, for those who want me to repeat machine A, we take the cost, we remove the allowance. The allowance machine, it is what? Machine, it is in terms of section 12C, manufacturing machine. It's a manufacturing. They told you here above that this company qualifies as a process to manufacture, therefore section 12C will be applicable. So now we needed to get the value. Why do we need to get the value? So that we can compare it to the selling price. So obviously, if you sell for more than the value, you would make profit. But if you sell for less than the value, then you'd make a loss. And in tax, we call this a scraping allowance. That's why we include it here as 60,000 scraping allowance. So, Mulatela, can I take your question?
Yes. Can you please go back to the trading stock?
Trading stock. This
Number
one.
8. Yes.
Okay.
I think that's when I just joined, so I'm not sure how they are positive.
Okay.
Yes,
So
yes.
now, remember when you acquire trading stock, you are going to make a deduction, right? So now, when you start using trading stock for private use, we are no longer allowing that deduction. That's why we need to recoup it at the market value. So now SARS wants to avoid you making a deduction for personal use. That's why when we acquired this thing, it was deducted at 800. But now, when it was used by the managing director, we recouped it at 1,000. This was the recoupment of 1,000. Same as this donation to the basketball. So we donated to a place that does not have a Section 18A certificate. So we will not apply these rules of deduction. Or is it donation? These rules we will not, because of there's no Section 18A certificate. It could be a donation that you just made it for personal gain, right? So that's why we will also recoup it at 10,000 market value, because of it was initially the stock has been bought in the prior year and 7,000 would have been deducted. And also in the opening stock, we would have deducted the 7,000. So we recoup it at, so recoupment, it means that it is positive, right? Did I answer your question?
Yes, thank you.
Okay. So now this brings us to the end of today's class. Um, so I've managed to touch the things that I thought were difficult, but yeah, we will still be doing a question that's very similar to what you will be writing this Saturday. So
I've
all the
been
best. Yes.
I've been trying to raise my hand, but unfortunately I could not afford it. And I just want to find out about this trading stock of 800 and 1,000. Why is the managing director is not paying for this cost? And
Why?
I mean, the company is just giving it to him, or how? What is it happening here? I
Okay,
don't
so
understand it.
I don't know why the managing director is not paying, but the company just gave it to the managing director. So actually,
Okay.
if we look at it, the managing director took it for personal use. It's like you at your workplace, maybe there's something that you want and you just take it. So I don't know why the managing director took it, but that's what they are saying.
And then on transaction number 4, there's something that you have said about the highest of the of three is the 3 and 2. You said is the highest. I did not understand whether you meant the highest in terms of the value or in terms of the years.
Highest in terms of the years.
Oh, okay.
So the 3 years is always fixed, and then you need to look at the restraint of trade term. So you choose the highest of the two to be able to get your allowance. That's why we divided by 3 year.
Okay, thank you.
Pleasure.
But there's this agreement of this study, whatever. So the way you explain it's like it's past me. I did not understand it well.
So learnership agreement. Now, in this case, what we have done. So when you're dealing with the learnership agreement like this one, right? So there are two learnership agreements here. The first one, it was entered into the 1st of January, right? So now, so basically, let me just highlight the part that we are talking about. Where is it? Learnership. Where are the learnership? Okay, there they are. Okay, now these are the learnership allowances. So if we look at the first one, there's a learnership agreement that was entered in this current year. So the 1st of January is 3 months before the year of assessment ends. So that's why we multiply this annual allowance with 3 by 12. 3 representing 3 months over 12 months because of their 12 months in a year. Now, they are also telling you that this employee completed a learnership with FAF. So this is the second learnership. So this one needs to get what? A completion allowance. Right. Because of it was completed with FAF. So completion allowance. The reason why we multiply by 2 is because of this was a 2-year learnership agreement. It was a 2-year learnership agreement. That's why we multiply with 2. Does that answer your question?
Okay, we multiply the you said is okay. The completion is by 2. We multiply it by 2. This 40,000.
Yes,
But
because it's for 2 years.
on the annual allowance, are these two companies or is only one company for the 2 years, or are we not taking the 2 years of the annual allowance?
Why should we take, you want us to do the 2 year for the annual allowance? No, we can't do that because of this learnership agreement started with the previous employer. We can't do an annual allowance on that. It started with the previous employer. So
Oh,
we are not
we are
part.
dealing with the current year. We're not taking the previous ones.
Yeah, we are not looking at the previous employer. So we are only entitled to the deduction of the completion and not. the annual allowance for this 2-year learnership agreement because it was not started with us.
Oh, okay, thank you.
Pleasure. Okay. Can I take your hand, Mlatela?
Sorry for that hand, but I wanted to ask there on number 6, the last sentence, they say the employee does not have a disability as defined. So I want to ask, if the employee had a disability, will it have any impact
Yes, you'll just increase this 40,000 to 20,000, meaning that you'll have 60,000.
all the time? Like
Not all
that's
the
the
time.
standard way of doing
It
it.
it is scenario specific, but
Mm.
I'll share a table to you guys that will guide you.
Oh, okay. Thank you.
Yes, not a problem. But if it is an employee with an NQF level 3, meaning that between 1 and 6, this employee is not disabled, you lose 40,000. Then if this employee is disabled, you'll use 60,000.
Okay.
But
Thank you.
I'll share to you. Just remind me tomorrow.
Okay, thanks.
Okay. Enjoy the rest of your night. It's a good night from me. Whose hand is up before we leave? There's someone's hand that's up. I'm not sure. I can't see the hand. I can't see whose hand was up. Okay, you can unmute if your hand was up. Okay, if you still have questions for me, you are more than welcome to send me a WhatsApp message. You have my numbers. Good night, everyone.
Thank you so much.
Thank
Pleasure.
you. Good night.